All right, guys. Good day from wherever you are watching this. Trust you're having a profitable week. Just going to be doing a very quick trade breakdown of this BTC trade um, that helped me pass my funded next $25,000 trading account. As you can see here, this was a trade that I took. I didn't even take it all the way down on this particular account. Because I was already at my target right here. It's one of the trades that we studied on our weekend calls that we have every weekend on this Telegram channel. We have the calls every weekend, and we caught that trade actually this last weekend, right? So this is what I was trying to explain on that trade, on the trade recap and the overview. Well, we caught that. And right after that, we got right into the trade the next day. So I'm just going to be going quickly into the charts to do a full trade breakdown, all the way from the thought process, the bias, the entry, and also even the trade management, right? So exposing why some people would have got a stop loss even in between the trade. So starting from the weekly, BTC has been bearish. We had a breakout to the downside from BTC. We had this rejection of this whole key level all the way down here. On the daily equally, we also have a breakout to the downside right here. Now, on Friday, we had this inside bar candle where on Friday we had this. On Saturday, we were on our call and we were noticing the movements right here. Now, if you check the inside bar candles, they are very strong, indications, especially in a trending market, right? So that Saturday, this was what we were looking at, and we had the anticipation that price will take out this high and be targeting, this low, which means that we'll be looking for a key level somewhere around to trade. So this actually served as our internal range liquidity for our trade. Now, once you have liquidity, what you're looking for next is a valid key level around or closest to that key level, that liquidity. So I had that marked out and I was anticipating some things, but I went down to the 4 hours to just refine a bit and see which key level was actually closest to that liquidity point. And what we had as at that time was this. This was the key level we had that was closest to this liquidity. As at that time, this hasn't happened, right? So we had that key level and it was marked out, as our H4 key level. So what are we waiting for? We are waiting for a valid reaction. Now, we had this bullish, bearish engulfing candle right here. We had this bearish engulfing candle right here. This one. As soon as price tapped into that liquidity point, by the time, if you are studying the trade from the 2 hours, you will have seen this zone right here as our liquidity, as our 2 hour engulfing. Same way you will have seen it even on the 1 hour as this zone right here would have been, an engulfing. So by default, you would have probably been trying to look at this as a nice entry on the 2 hours. But on the 1 hour, after this, because I think I saw it a bit later, after this drop, I noticed this QM level right here, this QM level right here. And the reason why I was happy to go with that QM level is because even on the 1 hour, we had a liquidity point right here. So I personally had my first entry right at this QM. And if you saw the screenshot that I shared earlier on the Telegram group, this was the QM that I was anticipating. And that was exactly what played out. So not forgetting that I had an invalidation point. Now, this liquidity was swept. However, I still had my invalidation points higher above, focusing that this 4-hour key level 2 is not to be played with because it could have still used this zone as liquidity and come here, and it's still valid that if price gets here, it might still react from this zone for another sell. Now, that was what I saw as at that time, and price came back into that zone and sold. So one of the things that I did in this trade was I allowed my stop loss to breathe. I literally allowed it to have some breathing space. On some accounts, I even had it at 61K, somewhere around there. And then, I had my target all the way down here, right? For a good 4 hours, very solid for a 4 hour, right? Now, in between the trade, and what I also did in my trade, because I was expecting a snipe, so I accounted for spread on most of my accounts. So I didn't take it at this exact point. I took it a few pips below, especially because of this liquidity point. So just in case this happens, because it's so annoying to have a good setup and you actually miss it or have a missed entry because of spread, right? So I took that trade. This was still on Sunday. It gave some good move on Sunday, came all the way down. Now, on Monday, price, decided to come all the way back up. And a lot of people got stopped out here at this week. But I was comfortable because what happened was this candle was what swept liquidity. So I was pretty much expecting that this high that swept liquidity and broke structure would be my protected high, none of any of these guys. So any extra positions I'm taking must account for a stop loss or invalidation right above here. Anything other than that, you're just going to waste or send your money to the market because, it's an invalid loss. It's not a loss that, had a proper invalidation. So that was the simple thought process behind this entry and this trade. The reason why I continued in my trade, even especially once there was a daily breakout right here, I was happy to see that daily breakout because what that meant was we've had a sweep of, the previous day's high and a breakout structure. That makes this high yet again strong, our invalidation strong. So even when price came here on Monday, before the close of Monday, and it came right again to sweep my entry as the previous daily high, I was still confident that it will sell, right? Because once internal range liquidity is taken, we can expect that external range liquidity must be taken, right? Especially if you are in, on the proper trend of the market or on the proper side of the market. So if you have that thoughts in mind, you would not be worried or stopped out, except the market wants to do, a really serious manipulation. And if you are not following the trend of the market. So the trade was literally as simple as that. I took it across 3 different accounts. I used it, in fact, to pass one account and get into some levels in another account. I think I even took this one. This was in my last breakdown. I took one all the way down here, right? So it's as simple as that. That was the thought process behind this. Just making sure I'm understanding my key levels, my structure, my liquidity, taking my key levels that are closest to liquidity, understanding that internal range liquidity is important in a trending market. And once it's taken, you can expect that the external range liquidity must go. And those are the things that give you confidence in your trade while you're taking your trade. Those are the things that keep you in your trade and keep you confident, especially if you have, a proper bias. So I hope this really helps you and have a profitable ahead.